Hey my friend, welcome back to another video. Now as option sellers, we make money by selling time, so I'm not going to waste any of yours. Let's get into it. Okay, so here we have my portfolio. Now the markets are pulling back. Now they're pulling back after the Fed meetings and the unemployment data came out. Basically, in my opinion, just to be real quick, I think it was a bit lackluster. Jerome Powell said the jobs market is, doing okay, and unemployment ticked from 4.1% to 4.2%, and job growth was, lackluster, not as good as expected. But I think overall the economy it's doing okay. It's kind of in line. It's nothing crazy. The market just wanted something, some excuse to pull back. The market's been on such a tear up recently. Like if you've been in the market the last few months or to a year, like you did exceptionally well. You did really good. Look at this. Now I'm nobody. I'm just a guy, right? Year to date, if you look at my portfolio, I'm up 44% year to date. 1 year, I'm up 79%. That's like 10 years worth of returns by the general definition, 8 to 10% a year. It's been a big run up, guys. So a little pullback in the market, dude, it's no big deal. It's really not a big deal. Now, what you want to think about is the individual companies that you're in, right? For example, AMD. We pulled back from like 185-ish to basically right now we're at about 170. But the thing is, the thesis has not changed. AI is going to take over the world. AI is such a big, bold trend. Like NVIDIA, AMD, those chips that they're making, they're going to be the infrastructure of the entire AI movement, right? So AMD has a tremendous runway to go. NVIDIA has a big runway to go. In my opinion, AMD is going to outperform NVIDIA. It's got a lot more growth ahead because their market cap is way smaller than NVIDIA, right? NVIDIA's already top dog, right? But there doesn't have to be just one ultimate AI winner. There's room enough for multiple to succeed, and in a healthy market, multiple companies should succeed, right? Plus, AMD just announced that they're going to raise their prices of their chips by like $10,000 per chip. That means there's a ton of demand. Like AMD is going to go crazy. So that's one I'm not worried about at all. Let's look at the option chain. Now they have earnings coming up, so there's a lot of higher implied volatility. So let's look at selling puts for August 15th. That's only 12 days out. Now the stock pulled back, it's about 170. What I would recommend, well, if you're a little bit more conservative, it's still a good play. Let's check out here the 160. That's a 0.26 delta. Before we actually get into recommending like what I would do, I'm just a guy on YouTube. I'm just, don't listen to me. Listen to me. It's your responsibility. I'm just a guy on YouTube. This is not financial advice. So don't listen to me. But if you are going to listen to me, this is what I would recommend. Probably the 160 on AMD, selling put for August 15th. Now that is through the earnings, so there is higher volatility. If you don't have that kind of risk tolerance, you can wait until after earnings to see what happens before you make any moves. But this pullback is a blessing for option sellers because the fundamentals of the company are still intact. The market was just looking for a reason to pull back. So AMD sell put at 160. Or if you're way more bullish, you can sell the 170, which is basically right at the money. And you get paid a $775 premium. Now that's basically you want to acquire the shares if you're going that bullish or you think it's just going to pop, right? If you just want like some of that free cash or get it at a very cheaper price, sell that 160 put. Let's go to SoFi. This is going to be the next play. I'm recording this on a Sunday, so the market's not open. So this is what I'm planning on doing. Okay, so SoFi is at 21.15. Let's look at the option chain. Now, for you, the numbers are going to be different because in real time, all the options contracts and the price of the stock is going to be changing. So this is just at the time of me recording. Obviously, these prices are at. So let's see here, $21 with SoFi. For the 15th, what I like to do is go on the traditional expiration. There's a lot more volume, liquidity, action. You'll get tighter bid-ask spreads. So what I would do for the 15th would be, I mean, honestly, it's only 12 days out. If you're a little more conservative, you can go on the $19 put. That's a 0.17 delta. Very conservative for a company that is just growing like crazy. They're super profitable. They're nothing but upside as far as the earnings and revenue is expected. This is like the hottest stock in town right now, SoFi. But if you really want ownership potentially and still getting it at a discount, do the $21 put. But yeah, so this pullback right now, it's nothing really fundamental. So at least for me, I mean, I really, I want to own more shares of SoFi. Can't get enough of it. It's just such a good company. The CEO is, Anthony Noto is just a legend. Super good. So yeah, $20 strike for August 15th, 12 days out. That's about it's almost a 3% return actually. That's really good. Let's see. Yeah, that'd be a $47. Now, if the stock goes down even lower, you sell puts even lower. It's just going to present a little bit more opportunity for such a great company like that. Okay, let's go to the next one. Let's see here. We have, okay, so let me talk about TSLL. So this is TSLL is a leverage position on Tesla. Now, with this one, I talked about in a previous video. It's important to keep position sizing small on a company like this. Tesla is just very volatile, especially with all that political mess going on. But it seems like Tesla, there are headwinds. There are headwinds in the EV market, the federal tax credit going away for EVs. I believe some of that's already kind of priced in because it's not really new information. Everyone's expecting it to be cut in September. The numbers on their last earnings were better than expected, but there's some headwinds. But I'm hearing and picking up in the news that there's like the new Model Y that's being leaked. People are seeing it in public. There's rumors that there's going to be a way cheaper Model Y by the end of the year. There's bullish things with Optimus, Robotaxi, of course. So I think I just wanted some skin in the game with Tesla. So. Kept my position sizing small. I sold Tesla $11 puts, and that expires August 15th. Now, with options, what's great about options is that if the stock continues dropping or stays around flat from here, we can always roll positions, right? So rolling is a tool that we use to save trades, buy time, put the trade, extend the trade out. There's ways to maneuver so that you can fix trades and end up still being profitable and good. Or I'll just end up taking assignment and then selling covered calls on that. So with options, you got to be able to be nimble. You got to be flexible. What's great is you set the parameters. But when you know how to play this game and you know how to think, right, the mindset's very important, you can become a very profitable trader over time. Just a reminder, the link is in the pinned comment for the Options Hero community. If you want to go deeper with options, have access to me, be able to message me anytime. I get back to you as soon as I can. It's actually me, nobody else. We could do live calls. The goal is to do it once a week, live calls. Message me anytime. And then you also have access to course curriculum, which will be rolled out pretty shortly. I'm currently in the middle of making a options course, basically a full course, and that'll be once you're in the community. That will always be available for you there. So link in the pinned comment. Join the Options Hero community. We'd love to see you there. Okay, so Let's go to the next one. So I really like Celsius. So Celsius, I have $40 put sold for August 15th. They also have earnings coming up, I believe, on the 5th or the 6th. I'm expecting good news from that one. I've been seeing them sell like crazy. People are drinking Celsius. So Celsius, I'm really bullish long term. Remember, we are investors. We trade options. We want to generate that income and that premium. But we are investors. We want to see the vision long term for these companies, and then we want to get some of that income along the way, along the ride. So the goal is always to have that thesis of where is the stock going? Is it a good value? Celsius, I think long term, it'll be $100 plus stock. Now along the way, this is where we ride that volatility. We sell options, we get income, we get ownership of shares, we sell calls. There's a lot that goes into it along the ride. But we want to get that consistent income because, if we just buy and hold shares, that's also really good as an investor. You're going to make a lot of money over time buying and holding, no doubt. But if you want to live a good life and have that income and cash flow coming in, that's why we sell options, for cash flow, right? If you can't touch that money for a long time, you don't feel wealthy, right? But if you have consistent money coming in, somewhat passively, probably the most passive thing that I can find is selling options. You're going to feel like you unlock something. It feels like you're legally printing money. It's crazy, when you get this right. But the key is always being nimble, always being flexible, knowing what trades you're in, what companies you're in, right? Being up to date with these things. And that's why community is important. And also ELF. ELF is going to be a great company. I mean, it is a great company right now, but it's going to be a 200 plus dollar stock. Mark my words, 200 plus is where it's going. They're a great management team. A lot of people got freaked out about the tariffs. Honestly, I'm probably underexposed to ELF. I have a 105 put. That one, it's been doing well. Right now the stock is currently 116. So yeah, I got that buffer. They also, they don't have earnings. So yeah, doing pretty good with that one. So we'll see. Sometimes if it rises up a little higher, if the stock rises up fast, you sometimes want to close it out. I thought about it. But I think I'm just going to keep it. Didn't rise up enough. I'm up 40% on this position, $245. I think I'm just going to let it ride until expiration. So going into this week, I also have Dutch Bros. Now this one, I really want to own the stock, Dutch Bros. They also have earnings. I believe that coffee company is going to take market share from Starbucks. If you ever go to a Dutch Bros, there's always a line. There's always, if you go on like a Saturday, there's always like 30 teenage, boys, girls, like going from after like soccer games, baseball games. It's like the trendy thing. Now, if they capture that youth, which I think they are, that youth grows up. They're going to grow up with Dutch Bros. It's more trendy. Their app is really good. They have insane flavors, super sweet, good stuff. Plus the broistas are very friendly, and it's just a good experience in my opinion. So I think over time that's going to be a good hold. Dutch Bros. Their goal is to hit like 4,000 stores by 2030 or 2035. So along the way, I mean, stocks are very simple. It's if the company is going to grow, if the company is making good revenues, good profits, if they're expanding over time and they're getting more and more profitable, the stock price is going to follow, right? So stocks are as simple or as complex as you want to make it. But if company do good, stock do good. If company does bad, stock goes bad. I think this is going to be a clear winner over time. But so what we have here is I sold a $60 put. Right now the current stock is $56.71. Now, My actual cost basis, which is insane, I got paid average credit 350. So my actual break-even price is 56.50. Now I sold this when the stock was like $63, $64. So now I'm right around that break-even point. If I acquire the shares at $60, I'm a happy camper. Because what I'm going to do is I'm going to take those shares. I might wait a little for that stock to rise up. It can go down short term. It can stay flat. It can go up. But when it gets to a point that I want to sell the stock at, and I'm ready, I'll sell a covered call on it and create cash flow again, right? Rinse and repeat. This selling calls, selling puts, doing the wheel strategy, it's very repeatable over time, and it's a profitable strategy over time. So one thing I learned, and I'll probably leave you with this. One thing I learned, I'm not a huge gambler. Sometimes I like to gamble, go to the casino, play a little game. The casino always wins because of probability, right? And you want the probability on your side, right? Even a 2% discrepancy in the probability, the law of large numbers will dictate that the person who has that 2% edge will win massive amounts of money over time. If you win short term, great. The casino's going to win long term if you come back, right? That's how it works. So if there's a slight probability, a slight chance that selling options is a profitable strategy, that it gives you an edge like the casino, you are going to win over time. And actually, since I started this strategy, I don't believe I've ever had a month where I did not make money. Literally since the day I started. You don't need to be an expert at this. You don't need to be a genius, right? You guys saw. Granted, it was a good market. But this last year, again, not to brag, not to just show this. I'm not being braggadocious. 79%. I'm just a guy. You're just a guy or girl, right? But you can do this. I can do this, right? If I can do this, you can do this. 100%. 44% year to date. Let's just see what the market has done, right? Remember, the goal is not just to make money with your stocks. The goal is to actually beat the market. Otherwise, why wouldn't you just put your money in the market, right? So let's say year to date is up a whopping 5%, right? For SPY, 5%. I'm up 44%. 1 year, 15.9, almost 16%. I'm up almost 80%, right? I'm just a guy, right? Think about that. Okay, let's just check one last thing. QQQ. This should definitely outperform SPY, right? Outperform the S&P 500. QQQ. Oh my goodness, a whopping 7.5%. Wow. That's definitely going to make you wealthy. Definitely. 7%, right? I'm up 44%. Okay? 1 year, QQQ, 22%. Not bad. That's actually really good. That's actually really good. 20%. Imagine if you had $1 million, that's $200,000, right? Very safe investment over time. Again, 79.4%. You guys will see over time how this strategy outperforms. Now, again, this is not financial advice. I'm just a guy. I am just one man, right? Making videos on YouTube for educational and entertainment purposes. So that's pretty much it. If you guys want to learn more, dive deeper into options, and join a community with like-minded people trying to make money from the stock market and get passive income, passive wealth creation, and grow together as a community, the link will be in the pinned comment and also the description area. All right. I'd love to see you there. Peace out.